So we want to thank you again for tuning in to our retirement education concept video. We finally, Andrew, reached the final part of our 12-step series on retirement income sobriety. Basically, we're trying to make sure that your income can stay sober. And so this is part 4. And now if this is your first time viewing this video, we highly encourage you to go back and look at the other videos in this series so you can get a full concept of what we've been discussing here. But today we're going to continue our discussion on giving you 3 more steps to having a solvent income in your retirement, so stay locked in. Hi, my name is Carson Graves, President and CEO of the Retirement Education Center.
And my name is Andrea Graves, Director of Operations at the Retirement Education Center. And we want to thank you for tuning in to our Retirement Concepts videos. These videos were created to help to make the difficult and confusing retirement process simple.
Absolutely, Andrea, because with so many retirement strategies out there, so many retirement concepts, and so many retirement products, it really makes it hard for consumers to digest it all. That is why we're so fortunate that we work with a team of expert advisors that can help us build a financial roadmap that will let our clients know when, where, and how they can reach their retirement goals.
For additional concepts on how to maximize your retirement, please subscribe to our YouTube channel and hit the notification bell to be notified when we upload new videos. So Carson, do you feel like a series like this could help more people retire with confidence?
Andrew, I sure hope so, because if not, we've wasted 4 weeks of our time. So I do believe that, because if you just take one or just a couple of these steps seriously, I think it would do wonders for your retirement income solvency. And of course, if you're taking it serious, your retirement income will thank you later. So what we're going to do is just continue our last part of this series and give you 3 more important steps that you're going to want to think about when it comes to making sure that your income does not have a hangover when you retire. But before we do that, there are always 2 rules to retirement income that we'll like to give you. And Andrew, what are those 2 rules?
Well, rule number 1 is to never run out of money, and rule number 2 is to never forget rule number 1.
So let's go ahead and dive into the final part of our retirement income series and give you some ideas that's going to help your income remain sober.
All right, Carson, step 10 is to use permanent life insurance. Could you tell us more about that?
Absolutely, Andrew. Permanent life insurance sometimes get glossed over by a lot of people because they often think about permanent life insurance as a pure death benefit. Now, for those of you who are very, very new to insurance, and there may be some of you watching that really don't understand life insurance, so I'll briefly let you know that the major debate around insurance, Andrew, is always going to be permanent versus term insurance. Term insurance, you rent it. You don't own it. Someday that insurance may go away if you outlive it. When it comes to a permanent insurance policy for your retirement income, this can be a very, very useful tool, because permanent insurance has 2 parts. It has a death benefit and it has a cash value part. Now, depending on what type of insurance plan that you use, maybe it's a variable life insurance plan and you can have a sub account and invest in the marketplace. That type of plan will, foreseeably give you more growth than maybe like a whole life plan or a universal life plan, which you may tie to an index. Nevertheless, those insurance plans may come with a minimum guarantee to allow you to put money away and actually have cash value build up. Now, here's the critical thing and how you can leverage permanent life insurance. One of the main aspects is what we're seeing now. If you have a down market and you may need to take income from your retirement portfolio, you can literally use permanent life insurance as a major hedge against your retirement portfolio by borrowing from the cash value. And by doing so, you can allow your money to remain in that retirement portfolio and recover from a market downturn. A very critical step to stop you from experiencing what we call sequence of returns risk, meaning that you're taking money out and the market is also taking money out in kind, basically giving you a double effect of your money being depleted, meaning that you can run out of money faster. A permanent life insurance will allow you to do that. Now, some people borrow from their 401k plans, right? That's a viable option, but the difference is that 401k plan, you have to pay it back within 5 years. If you don't pay it back, it's going to be considered a full distribution of that money, and you're going to be taxed at your ordinary income tax rate. And if you're under the age of 59 and a half, you may incur a 10% early withdrawal penalty. So you have to be careful about that. But if you have a permanent life insurance plan, You can borrow that money. You don't have to pay it back because the insurance company is basically using your money that you've taken out of that policy as collateral against your death benefit. So if you don't pay that money back, what they're going to do is the amount of money that you borrowed from it, they're just going to deduct it from the death benefit. And so you can weigh if that's going to be okay with you or not. It's okay. You can pay it back if you like as well, and you're just paying yourself back just like you would be paying yourself back when it comes to your 401k. So the main thing about understanding having permanent life insurance, Andrea, for your income step is to know that it can be used as a hedge and leverage in good and or bad times. And one other note that I would like to add to the discussion about permanent life insurance, Andrew, is that if you decide that at some point you don't need the death benefit from the life insurance and that cash value is there, you can do what is known as a 1035 exchange out of that permanent life insurance policy. And if you needed some income, you can place that into an annuity, and that annuity then could now provide you an additional lifetime income, which we know we all don't mind having extra income. So if you don't need the death benefit at some point in life, you can literally roll that money out of that life insurance plan through a 1035 exchange, place it into an annuity, and have a guaranteed income stream added to your overall income sources.
All right, Carson, step 11 is to plan for healthcare costs. Now, I know that's a red hot topic for you, so explain more about that.
Yeah, and it should be a red hot topic for everybody who's watching this video, because we all, Andrew, know someone, whether it's a parent, a grandparent, a sibling, a friend of a friend. Most of us, 99.9% of us, know someone who has had a major healthcare issue. And according to a recent Fidelity study, an average 65-year-old retiree will spend about $260,000 or more for major healthcare needs. So the one thing that I would tell, and that's not even including long-term care, by the way. That's not even including long-term care. So the one thing that I would tell anyone is that you're going to want to speak to someone, first of all, who is competent in Medicare, an independent party that can give you options about your Medicare options. We work with a full team, Andrea, that can help our clients understand whether they need a Medicare supplement plan or whether they need a Medicare Advantage plan to help them with their Medicare needs. And so you're going to want to talk to someone like that. Secondly, if you're fortunate enough to have an HSA account, that's another great tool to utilize, because that money obviously can come out tax-free to help pay for some of those qualified medical expenses that you're going to have. And last but not least, let's look at long-term care. Long-term care is so underrepresented for so many people out there, and that needs to change. Because long-term care, obviously 7 out of 10 of us is going to need some form of long-term care, and it can come in so many different forms and fashions, right? You can have long-term care placed on your life insurance. If you didn't know that, you need to speak to someone and ask them, how can I have long-term care incorporated with my life insurance? You, of course, can have a traditional long-term care plan. You can do a lump sum amount for a long-term care plan and not have to think about monthly payments. You can even tie a long-term care strategy to your annuity payments. So you want to make sure that you understand how to minimize the effects that healthcare can have on your retirement, because this step here, I waited to the end to speak about it. This step here could literally wreck all the other steps to your sobriety steps to retirement income freedom if we don't get this part right. Healthcare is a major issue. Let's make sure that you do everything in your powers to plan for it.
Now, Carson, the last step is to get a retirement income plan. Now, is this like a save and invest for last type of step, or what is it?
Yes, Andrea, once again, you're 100% correct. We were saving this for last because this is absolutely the most critical step, and that is actually getting a retirement income plan that incorporates all the things that we've been talking about. You see, a retirement income plan is very simple. It actually plans for you having income once your paycheck actually stops. It's literally the difference of you working for your money and your money actually working for you. Now, a retirement income plan is going to help you fill these gaps. It's going to help you answer all of these questions about what should I do and when should I do it, how should I do it. That's what a retirement income plan does. It's a roadmap, like we say in the beginning of our videos. And so for those of you who are watching, our subscribers and anyone that you know, let them know we want to allow you to get a complimentary retirement income plan. If you're watching this video and you're serious about retiring with confidence, give us a call, let us speak with you, and see if you're actually qualified to get a complimentary retirement income plan from us that can incorporate everything from long-term care to all of your retirement income sources. We think it's just that important, and we think you're just that special because you're tuning in and you're watching this channel. So if you want to make sure you retire with confidence, give us a call. We want to provide you with a complimentary retirement income plan that will give you the full basis of incorporating all of these steps and outlining this for your personal retirement aspirations. I've seen clients who have told me that they have seen advisors charge $2,500 to $6,000 for a complimentary retirement income plan. That's fine and dandy if you want to pay that, but we want to make sure that our clients and people that are invested in us, that we invest back in them. So we want you to reach out to us, let us speak with you, and see if we can't help you get on the right track of developing all the steps for your retirement income.
Carson, thank you for your insight on this topic, and thank you for watching. And if you feel that this was beneficial for you, please like and share this video with others.
So I really do hope that this retirement income series gave you some insight and was beneficial to you in helping you think about what steps you're going to need to take to have a proper retirement income plan. Please remember that these videos are created for educational purposes only, and that you should always reach out to your own financial advisor, your own tax advisor, and your own attorney regarding your personal situation. And also, if you're looking for a fiduciary financial advisor to help you with these type of complex financial matters, we highly encourage you to click on the links in the description below and go ahead and schedule a 1-hour complimentary consultation with us today.
For more information about this topic or any of the other topics that we've shared in our other videos, please feel free to reach out to our office or leave any questions or comments in the section below. After this video, please check out our other videos that will give you tips on how to maximize your retirement. And if you like this video, please give it a thumbs up, subscribe to our YouTube channel, and share with a friend. Thanks for watching, and remember, if you have questions,
we have answers.